So today what we're going to do is I brought Sarah Vitale. Does everybody know Sarah?
Yeah. Hopefully at this point, you better know.
Sarah, what we're going to do today is Sarah's going to take us through the data to be able to conduct the intrinsic valuation that you're going to do on your foreign bank. Okay, and she's going to review with you where to get the data that you're going to need to be able to put together, the research report, to be able to conduct the industry analysis, and to be able to conduct the peer group financial ratio analysis. Okay, and then what I'll do is after she's done, I'll go through the book. Again, because for some of you, you didn't take my 123 course, so you haven't gone through this. So that's why I handed the books out again, and we'll walk through them so that you understand how to put these things together. Most of the people in the class have taken 123. What I'm going to do is I'm going to use Mason's template. You might already have your template, but I'm going to send you Mason's template because I think Mason's template is really, really good. You had Adam in your group and you had Jordan too. But I think this is a really good format for some of you who maybe don't have your format from last semester, but I'll make sure that I provide this to you. This is pretty good. Okay, and then what I'd like to do is on Friday, bring in your deliverables. I'd like to take a look at them. You can have me, I'll review them on Friday just to make sure that when I do receive them that they're, maybe you have to print out some stuff or move stuff around a little bit. And then I'll take them and then I'll review them over the weekend and then get them back to you on Monday. And then on Monday and Friday next week, I'd like to finish up the PowerPoint presentations for the book. I'll hand out the rest of the assignments for the end of the semester. I will not be here on Wednesday. I have to go to Chicago Tuesday night, and then I'm going to go to a conference on Wednesday, and I'm flying back on Wednesday night. So I'll be back on Thursday and back on Friday. So it's a strike force mission to Chicago. That'll give you time to work on stuff too. Okay. So unless you have any comments or questions, I'm going to hand it over to Sarah.
Okay, awesome.
Thank you. No, thank you.
Okay, so international. You saw me probably if you were in Professor Souza's 123 class. You got to do books on that. I'll just give you a heads up. The data collection for that, much easier. So we're going to add a little bit more difficulty. So if you're like, oh yeah, I got that data in like 10 minutes, not a big deal. You're going to need to the umpteenth power number of time for this data. Mostly because they don't report the same way. And so we're going to have to dig through a little different places. Some places will have it, not everyone will report it the same way. I actually thought of this class this morning. I live across the street from a preschool. My mom used to work at that preschool. And I remember one of the dads used to drop off the kids every morning, and he would be like full suit, 7:30 in the morning, like, how are you so with it this early? He says, I've been up since 4. Like, what do you mean you've been up since 4? He's like, he's a financial advisor. He opens with the markets. This was like noon for him. It's like, so if you're in finance, get used to being a morning person. And then I thought, geez, what happens if you're an international finance person? Do you ever sleep? It's like, you got to be aware of all the different time zones.
No, because the Europe closes, at 8 a.m. and the U.S. opens. When the U.S. opens, then Asia opens.
Yeah,
so it's 24 hours.
It's all the time. I get grumpy when I go to sleep and I wake up and there's hockey news that happened because of the East Coast. I'm like, what? So that's just kind of a heads up of the career you're getting yourselves into. Sleep is good, but only for weekends. Actually, I guess only for Saturdays, because Sundays is really Monday somewhere else. Because the markets are so different, and they're constant, and they're always changing, and they're all done in different ways. So give yourself time for this. It's not going to be nearly as, okay, go to Mergent, download all the things, you've got everything you need. Not so much one-stop shop for this. But there are some sources that will help you out. Library homepage, hopefully you all know this very well by now. It's changed up a little bit, looks a little different. We seem to send Garrett over in web services new requests all the time. This should be the way it looks for a while. Research guides is, again, where you still want to go. Formerly known as subject guides last semester, or last year, now known as research guides. Same one you're still gonna want is the business one. Even though there is one for, or there isn't one for finance, it's all under business. There's a global business course, don't worry about that one. That's just mostly for the MBA students who need to do marketing kinds of things. Go right on down to the business administration page. And we're gonna be looking at the same things. The company information, the industry information, and the investment and stock market information. You're also probably gonna wanna have a new tab open with our friend Google. Because let me tell you, the only way I can get through a lot of international finance stuff is by the joys of Wikipedia. Because that will explain to me what is the actual name of that company. People are really good at updating that. So I'm like, what does HSBC? It's like, I see it all the time. I'm a Formula One fan. I see international banks all the time. So what is it? Getting to know it a little bit better. I can see, you know, what their stock price is, but mostly what their ticker is. So then I can do some little bit more research specifically. If I just look for HSBC, that's a whole acronym soup, probably not going to be working really well in the databases. Also, if we search for that, it'll come up with lots of different funds that they trade separately. So we want to find out what's the main one. So I wouldn't necessarily use Wikipedia for all of the data, but definitely use it for proper names, make sure you get the spelling right, what is their full official name. So I always like to have the two windows open at one time, just to make sure I'm looking for the right thing. So under company information, you did 123, you know Mergent Online really, really well. Might be useful, mostly US companies though, that's gonna be a problem. So it's not gonna be quite as easy to get all the data that way. So what I'm really gonna focus on internationally is D&B Hoovers. So you may have used it last time, maybe not, I can't remember if it was up and running last semester. It was up and running today. They are on speed dial. I should know their number by now. All the times I call and report. So this is international and national, private companies, public companies, everything in between, has something in D&B Hoovers. It's not going to be nearly as large and expansive as it is we were used to in Mergent Online, but you will be able to find something. So I just searched while we were in here. When I first came in, the first one on the list was RBC. I'm a hockey fan and a curler. I know this bank very well. Which one is it? It's like, oh, this is what looking up in Wikipedia or on Google is really good for. Which one do I really want? Which one of these is the thing that I want? Really, I did some searching and I want Royal Bank of Canada. So there we go. There's some information about that. You can see who its parent is. You can always click on that. You can see what they do. This one, let's go back to the top one. There we go. And you'll see what they are. Their industry is banking. You'll see some of their information. This one's actually a good one, so if you chose this bank, you're in luck because they're really good at reporting. Probably because they do so much business with the US, they want their things to match really well. So you'll see a lot of the data is there. You can see some SWOT, you can do their financial health, some of their ratios. Not all the banks will be quite this easy. You might have to do some hunting and pecking. Get your key contacts so you can see who the CEO and director is, and all that kind of good stuff. The other thing that's important is the industry. So instead of going to the industry tab, I'm just going to show you how to do industry right here from here. The industry is, well, banking. Great. Let's click on banking. And here are industry reports about banking. So before we used to go to IBIS World because IBIS World is fantastic, but we only really currently subscribe to the US. It's the larger internationals and add-on package. Frankly, they're not that great at international yet. D&B Hoovers is great at international. So you'll see all of these market research reports. You'll see there's 146 market research reports, and there's going to be one on different regions. So we'll click on all of them. Do watch the dates. They never take anything out, so some of the things get a little bit dated, but mostly you'll see that they're pretty new. So you'll see there are reports on banks in Singapore, Poland, Russia, Brazil, banks in China, there we go. So I know some of you are doing a Chinese bank. Click on that and you'll get the full market report of what's going on in banks in China. Are they still all government owned?
Very hard
To tell?
to really assess the loan books, and the transparency is always an issue.
Yeah.
And who knows what they're actually reporting. But if you're gonna pick a Chinese bank, I think it'll be extremely fascinating to see how we approach it.
So there you go, it gives a little bit of the definition, some analysis, and when you keep scrolling down there, you're gonna get some data. And again, yeah, this is a questionable one, so how do we get this data, who's reporting this data, are they reporting it correctly? We're not sure. We can only go with what we go on, and that's why you're in this class, to learn how to do that kind of stuff. But see, there we go. So there's the billions in US dollars and in pounds, what percentage of growth there is, what the segmentation is, all that kind of information. So for your countries, I don't want to promise anything, but there should be a banks in for your country. There should be, unless it's a really tiny country. Banks in Spain, banks in France, banks in Germany, banks in the UK, banks in Canada. So you will see that in there. So if you start off with your bank and see what you can find, click on that industry and find that report. That's how you're going to get those kinds of numbers. I tried another couple ones. Well, let's do the, so I tried Bank of Spain. Didn't even autofill anything for me, so, what's going on there? And that's probably, again, a case where we need to make sure the name is correct. I'm pretty sure they don't call the Bank of Spain in Spain, because they don't speak English, and that is English. So we'll probably want to look up and see what their real name is. There it is. It is in Spanish. Let's look that up instead. There we go. So we found that one. So this one doesn't seem to have quite as much data, but it's got something. It's definitely got some news. It might have some people. There we go. You can see who the key players are. And it'll have that industry link. It's also a Federal Reserve Bank, so that would be a different kind of bank to look up as well. But this is the Federal Reserve Bank of that country. You'll get your news, you get your signals, you get to see who the corporate family tree is, so who are they related to. But yeah, not a lot of data in this one. It's going to be hit and miss in these places, because they don't have to report in the same ways. It's not going to be an apples to apples comparison. You can try this in Mergent, especially for any banks that are publicly traded in the US. Find out what their ticker is. Let's see. This one doesn't seem to have one. Let's go back to HSBC. It did have one. So then again, let's see if Merchant has anything. They may not. They don't, because it's international. It's worth a try.
Would S&P and Value Line and Morningstar?
Let's check. That's the thing. So let's go down to investment and stock market information. And our next step is to check out Morningstar. This happens sometimes, we don't know why. When you're in Chicago, go yell at them that this seems to happen all the time. They're based in Chicago. They have the greatest accents. I think they only hire people who are born and raised in Chicago. Every time I call them, they have their really thick Chicago accents, and they always ask, how's the weather? They seem to think we're in Los Angeles, though. So. Is it sunny there? I'm like, no, it's foggy. Why is it foggy? We're in San Francisco. Oh. So yeah, this one did, because it's publicly traded. This cares more about, Merchant really cares about the company. This cares more about the investment. So if it's got a publicly traded ticker and it's international, it's not Merchant, it's probably going to be in Morningstar. So here's this one. So you get some data there. So if you can get one of those little tickers, you're going to be in a lot better shape. So try to find something that has a ticker, find anything to be able to get this kind of stuff. Because here we've got financial ratios, we've got other things. Financials, so we got lucky here. Even though it wasn't in D&B, it was in Morningstar.
And if you pick the bank where you're having problems finding the financial data and the information, you may have to pivot to another bank.
So do check really quickly to see how likely are you to be able to get the data. Bank of Spain might be a challenge because it's a Federal Reserve Bank. And it's
You
more
don't want to
national.
you don't want to do central bank. I think we were doing Santander.
Jeez. Someone's walking heavy upstairs. Okay, so those are the two places you'll really want to focus on. Mergent, which I always said, Mergent is the best. Possibly not the best one for this course. And that's why I come into both classes. They are a little bit different. D&B Hoovers is going to be your best bet, especially for those industry reports. There's probably not going to be a better place to get that than D&B Hoovers. And then if it's not in D&B Hoovers for the company data, Morningstar should have it. Those will be your best bets. Net Advantage, possibly. It really depends on which bank and if they are publicly traded in the U.S. So the smaller ones, not so much, national ones, not so much, but things like HSBC will, so they'll have some data as well. So look for those that have that ticker. They're publicly traded in the U.S., they're going to have to report. It'll make your life easier. And you'll be able to actually get apples to apples kinds of data.
I do encourage everybody to pick a bank that has an ADR traded on the exchange.
There you go. How you know that? I don't know. That's what your professors do. That's what the Googles is for too. So those are the big ones. Not as many resources to go through because most of the resources we have here are mostly focused on nationally publicly traded. But D&B Hoovers, number one bet. Second bet, investment stock market information, Morningstar and Net Advantage. Not so much value line for this one. It's going to be mostly U.S. companies. Questions, concerns, gripes, or complaints? Yes.
What about the individual bank websites?
Sure. But, of course, always be aware that they are going to gloss over things and be shiny. This is their corporate face, and they're not going to highlight all of their bad stuff. And also depending on their country, which your professor will know more, whether they have to report and what they have to put on their websites. U.S., we're all about data. Give us the data. Give us the data. Some other places, Europe is sometimes big on data. Asian banks, not so much, especially Chinese banks. They're not going to put up a whole lot. But these are, their marketing face. They're going to put on their best face. So take everything they put here with a grain of salt, other than probably their data, because that probably has to be correct.
Let's go up into investors and see just an example of what may be up there.
Go. The results and announcements, shareholder information, investor frequently asked questions.
Let's do shareholder information and see if they have any 10Ks or annual reports or anything.
Dividend calculators, histories, share analytics. Oh, and the annual general meeting. We were talking about this in the other class. If you ever get a chance to be on an annual meeting call, do so, because they are just amazing to listen to. All sorts of weird, wacky stuff.
I highly recommend it, unless it's in a foreign language. I highly recommend listening to one of the analyst conference calls. You'll get a lot, out of where the bank's going and then how to value it.
Yep. They'll say where it is, and sometimes they'll have meeting minutes from it or recordings of it, or sometimes you can join them live if they're happening. So.
Did you see if there was a 10K or a
I
annual
didn't
report?
I didn't see any. Could it be under media? Sometimes they put that out for the media. No.
It should be under, what about results and announcements?
All reporting, announcement, annual report.
There we go. Okay. So you're gonna have to dig around to get the 10Ks, I would read the press releases. And
Press
then
releases
definitely go through the
should be
annual
on the media. D&B Hoovers will also have that look for triggers. They'll put up all the news, but the triggers are things that they think investors really need to know about, like CEOs stepping down, new products being announced, new regulations in place, things that would affect something. Just, you know, we did a corporate annual retreat, probably not going to trigger anything, but it is news, but it's not a trigger. So that's what's interesting about DMV.
Sometimes they do give you earnings guidance, you know, for what the earnings would look like next quarter or next year.
Strategic report, so that's them looking into the future. So each one's going to be different. There's going to be apples, oranges, and bananas. And one company is going to be an apple, one's going to be a banana, one may be a kiwi fruit. I mean, one could be stalk of celery. They're going to be very different, but you'll be able to piece together enough to be able to make the kind of analysis that you need. Just might not be the analysis that you're used to making. If you run into trouble, most important thing up here, ask us. That's what we're here for. I'm available. You can always send me a question. You can go right to the reference desk and say, I'm working on a report on this topic. I need some help finding financial data for these companies. They'll walk you through pretty much what we did, and when in doubt, we'll usually go Google. If any of the librarians other than me can't figure it out, they'll usually email me or direct you an email to me, and then I can play around with it as well. So don't wait till the last minute. We're definitely coming to that point in the semester where the librarians feel like we're either like the hero or the sad moment, or we can save your butt or tell you too late. So don't wait till the last minute. Don't be that. Don't be on that second half of that. Let us be your hero and help you over the hump and get this in.
I'm sure you're willing to give us your cell phone number, and we can call you 24 hours a day, 7 days a week for the next 3 weeks.
I made that mistake, and there are too many professors on this campus who have my phone number. Yeah, during Easter break. Yeah, it was Saturday between Good Friday and Easter Sunday.
So Black Saturday.
Sent me a text message. Why is no one in the library? I'm like, because it's break. It's a religious holiday. We're taking a break. I'm in Seattle. Leave me alone. But I did answer her question. Okay, so lots of data to look for. Give yourself lots of time. Be patient. This is very much more like the traditional research I'm used to, where it's not just call response, question answer. It's going to be like dig, go, no, go back, go this way. It's very much like driving in the Bay Area. It's like, that's what the point I need to get to. I'm here. Why is it taking me so long? There's going to be potholes. There's going to be detours. Just be prepared for that. But you will get to the other end eventually. Okay, happy hunting, happy evaluating, happy bank picking, and all that kind of good stuff. Learn lots.
Thank you.
Thank you.
All right,
That's
thank you.
Very much. I'll come by and just-
Okay,
Thank you.
I'll be around.
Thank you. So let's go around and see who's on each of the teams. Okay. So who's on your team? Okay. And then you three?
And Kyle.
Okay. And then I just want to make sure, is everybody that's on a team, is there any teams that didn't take by 123? Okay. You were in investments, right? You didn't do 123?
We have one.
Okay, good. I just want to make sure that there's, that somebody's already gone through this on your team. Okay, so let's go through the template, okay? Especially for those who haven't gone through this before, okay? So I'm going to call down to the print shop. Okay, the print shop is underneath the graduate school or the business school and the power plant. So you go, if you're facing it, you go around, you walk down the driveway, you go around to the back. That's where they will bind these for you, okay? And they have to be bound like this, okay? Don't bind them any other way. If you do, I'll throw them away, okay? They have to be like this. There has to be a clear cover, okay? They'll have this stuff for you to be able to do. It's got to be in color. I need to look at it too before you go to print it at the print shop in color. I want to make sure that it's been edited and I check it. So you should be working with me as you start to get the draft of the presentation done. You should be working with me on a one-on-one basis to make sure that the methodology and the valuations are coming out correct, that it's been formatted correctly, and then I check everything, and then once it's ready to go, I'll say, okay, go to print. So it's got to have a clear cover. It's got to have this black spiral binding, and it's got to have a black back. Okay, that's it. That's the way it's supposed to look. And then once I sign off on it, it's going to be in color. Okay, but you can print it out, one slide per page, staple it up here, and then I'll sit down with you and I'll walk you through it. Okay. Right off the bat, we know what the bank is that you're evaluating. We know what your recommendation is. We know the intrinsic value compared to the current stock price. We know the premium or discount, depending on what the valuation turns out to be. Who the team is that put it together. I wouldn't put my name on it. Don't put St. Mary's and don't put this class on it. Okay? Because I want you to be able to show it to somebody and have them think that you did it in a corporate environment, not in an academic environment, or that you did it at a graduate level, not the undergraduate level. This is basically graduate level stuff. Okay? So on the second page, you're going to get the overview or the outline. Did you have a comment, Eleanor? Okay. If you have any questions, just let me know. A little background on the firm. I really like just a fact sheet, just facts about the company, high level. I'm not a big fan of paragraphs. Then you have the SWOT analysis. Actually, the presentations that I give you may be in a different order. We may rearrange the order once you show it to me, but the order of this is pretty much the same. So you have the SWOT analysis. Then you have the rankings. So this is actually a really nice table. Lisa, you guys did a really nice job in this presentation. If you want a copy of this presentation, I'll send it around and you can take pictures of it. But here, right off the bat. Huh?
I sent it like a digital copy to you.
Okay, perfect. I'll send it out as soon as possible. So you have the ranking of the banks, the name of the banks, and then in trillions or billions. Okay, very simple, very clean table. You're going to have to find the peer group for your bank, depending on your geographic region or your country. Okay? And then I really like this one where Mason and his team basically laid out the business segments of the bank. So very quickly you can see the organizational structure of the bank, and you know what divisional or product lines make up the bank's org structure. And then underneath it, he had the revenue contribution for each of the product or divisional lines. So right off the bat, you not only understand the organizational structure, but you also understand what areas are generating the majority of the revenues for the bank. Okay, so that will give you an idea of its comparative advantage and also its competitive advantage with its peer group. What overlapping services there are with the peer group, but also what other unique or comparative advantages they have as an institution. The next one is the products and services. I like this one too because very quickly you can see what products and services they provide their customers. And then we usually put an asterisk or multiple asterisks next to the products and services that make up the majority of the revenues and are generating the fastest revenue growth for the bank. So it's not only contribution, but it's also which ones are generating fast revenue growth. Because these banks are very, particularly the U.S. banks are extremely innovative. European banks are pretty innovative, but not as innovative as the U.S. banks. Then we have the leaders, the leadership. You have to have 6 of these pictures. We need to know who the leaders are within the bank that are actually overseeing and running divisional or product lines. Do not put boards of directors in here as the leadership because the board of directors don't do anything. They basically just rubber stamp the CEO and the president. It's people who are actually running mortgage divisions, or investment banking, or business banking is the ones that actually, generate the revenue by selling the products and the assets for the bank. You need to know the person's name, their title. I like to know where they went to school, particularly where they got their MBA or JD. what companies they worked with before, and how long they've been with the bank. Okay? And that will give, and also diversity. It tells you, do they have a diversity program? Is it a bunch of, white males, or are there females or Hispanics or other, diverse, racial diversity, on the bank? That tells you a lot about the bank, actually, and its priorities. The next is the financial ratio analysis. That shows you the financial ratios for the bank compared to the direct competitor, against the peer group, against the industry. And there's 2 pages of financial ratio analyses, which gives you a large enough sample to get an overall financial condition and position of the firm by using the financial ratio analysis. The financial ratio analysis, obviously the ROE, ROA, and the net interest margin are probably the most important financial ratios other than the PE to compare against the direct competitor, the peer in the industry. So this is how you're going to want to do it. Once you fill in all of the financial ratios, then you're going to go row by row and conduct the financial ratio analysis. First thing I do is I will look at the target company or the subject companies. Let's say in this case, this was JP Morgan. Their ROE was 9.8 compared to 6.8 for B of A. So that's really good, that's excellent, significantly higher than the direct competitor. But I really want to focus on the peer group. So what you're going to need to do is you're going to need to get the peer group, get all of the return on equity for each of the individual banks, and then use their assets, total assets, sum them up, divide it back to get the weights and calculate a weighted average for ROE, ROA, net interest. So the peer group is a weighted average calculation, not an average calculation or a made-up number. Okay? Some students don't know how to do weighted averages, so what they'll do is they'll just plug a number in there, and they'll do the same thing with the industry. Or what I've seen in the past is what they'll do is I'll give them an example of a bank report that they can use as a template, and they run out of time or they don't know how to do the research, and they end up just plugging the numbers in from here into here, okay, somewhere. So to do this correctly, you got to do it the right way. So JP Morgan against B of A, that's significantly higher. The ROE for JP Morgan was 9.8, and the peer group was 8.3. That's significantly higher than the peer group. So right off the bat, I would think that would be excellent. And since these banks are pretty well run, if you picked a top performing bank, they're going to be better than the industry, unless you do Deutsche Bank, or you do some of the other problematic banks. Or when we did Deutsche, it was very different than when we were doing JP Morgan or Goldman Sachs or B of A or Wells Fargo, because the majority of the financial ratios were below the industry and below the competitor in the peer group. So it was mainly poor over here. Deutsche Bank's financial condition and position was horrible. It was one of the worst that I've seen. And the stock price actually collapsed over the last 3 to 5 years, bottomed out, actually dropped below $10 and almost got delisted at some point, once you drop below $10. Seems to have bottomed out, and then they tried to merge them with Commerce Bank. That deal fell through. So the bank is in a really precarious position. So if you're doing Deutsche Bank or one of these problematic German banks, then we got to work a little bit closer to do the valuation, because it's going to be a lot harder. I don't know if you know Hunter Tully, but he and I worked really closely on Deutsche, and we were screaming at each other the whole time because the numbers weren't working out in the multiples. It was really, really hard to get to the valuation. So as you go through the rows, you're going to compare the subject to the peer group, to the direct competitor in the industry, and if they're significantly outperforming the direct competitor, the peer group in the industry, you're going to give it an excellent condition. Okay? And you have to use these conditions. Don't use your own verbiage in the conditions, like awesome or great or super or something like that. It's either going to be excellent, good, above average, average, below average, and poor. Okay? So those are the codes. Then you code them, And then you step back and you look, and in this case, you can see JP Morgan had excellent to good in almost all of their financial ratios compared to the peer group and the direct competitor. So we gave it an overall financial condition or position of good based on this set of financial ratios. And then we did it again. So this step, the financial ratio analysis and the assessment of the overall financial condition and position of the firm is the first step in the fundamental securities analysis, in the intrinsic valuation. Okay. Then we get into the pricing. There's fundamental securities analysis to calculate the intrinsic value, and there's technical analysis. Technical analysis is a form of determining the price, but you're using technicals as opposed to fundamental valuation methods. So what we do here is you basically have a 3-year chart, price chart, okay? And if you want to put moving averages, you can put moving averages on them to the 10, the 30, and the 50. As you can see from JP Morgan, it was in a trading range. There's the support, there's the resistance line, there's the upward trend. So we basically conducted the technical analysis. You got the RSI and the MACD that are basically 2 trading momentum indicators from a technical standpoint. And as you can see, the overall trend was up. So what we did was we just extended out about a year and said, okay, what would be, based on this trend line, we just used a ruler and trended it, where would the stock price be as of May 1st, 2020? So we go out 1 year. We would put that 1 year price forecast and stick it right there under target price. And we would compare it to the current price. And in most cases, if the trend is upwards, then it's going to be trading at a premium in a year from now. But Deutsche wasn't like that. Deutsche was in a downward trend. And actually it started to form a bottom. It was in a trading range. So what we did was we basically actually made a discount out of this because we thought that the stock price would continue to deteriorate because of the overall financial condition and position, and because the German central bank or the German treasury wasn't willing to come in and nationalize the bank, which they probably should have done. So we get to the first model, and this is exactly how these need to look. Okay, so they're very specific reports because I read like 150 of these things every quarter. So at the top, it gives you the type of methodology you're using, the intrinsic value, this is the perpetuity against the current stock price with the premium or discount. Over here on the left-hand side, you got the capital asset pricing model. Okay, I ask students questions all the time. Where did you get the beta? How'd you come up with the expected return on the market? Things like that. And some students say, I don't know. I got it from this report over here that you gave me on Deutsche. So I used the data from Deutsche to use on HSBC. You got to look it up. Okay, and you want to use a forward risk-free rate. Okay, where will interest rates be if you're using the 10-year Treasury or the Bund out of Germany or the JGB 10-year out of Japan? You want to look out and say, where do I think the 10-year is going to be in a year from now? And then this is where you're going to calculate the expected return on the equity, which is one of your discount rates. The expected return on the market is the other. And you're going to calculate the weighted average cost of capital. Between those three, you'll get the sensitivities in the discount rates. So based on those 3 methodologies, we came up with discount rates or expected returns of 7, 8, and 9%, which became the sensitivities to run the valuations. You're going to have to show me the 2018, the 2019, and the 2020, the 19 and 20 estimates, either on the earnings per share or the EBITDA per share, whatever numerator or cash flow metric that you're using. And I would recommend, you can use either 2019 or 2020. It really doesn't matter, you just need to tell me which one you're using to do the valuations. Okay? And then over here you have the valuation sensitivities based on discount rate from low to high, which is going to give you the values from high to low, and usually you'll pick the midpoint as the valuation. It ties up to here to calculate the premium or the discount. The Gordon growth is exactly the same. Again, I'm checking to see if you're transferring the data over. A lot of times I'll have CAPM table on one page, CAPM table on another, and they're different. Why would they be different? They're exactly the same. And then the earnings per share, the EBITDA per share forecasts, they may be different too. They should be exactly the same. And the only thing that's different is the Gordon Growth intrinsic valuation matrix, where you have the discount rates here, and you have the perpetuity growth rate assumptions on the earnings per share out here. I would use 1, 2, and 3 because most of the majority of the banks that you're going to be evaluating are fairly large banks, and it's really hard for extremely large institutions to grow their earnings per share, EBITDA per share at a very high rate, forever. So you're probably going to be focusing on the 1%, but I'd like to add in the 2 and the 3%, just in case there's any upside surprises, either economically or at the firm level, where I can see what the potential resistance or the potential high valuation could be if interest rates were lowered, or credit default risk premiums were narrowing, or the central bank lowered interest rates, or they surprised in an earnings announcement, something like that. The next is your multiple approach. Again, you're going to have your earnings over here. This is actually what I like. Where you have the 5 banks right here, you got 2018, 19, and 20 price to earnings multiples, or price to EBITDA per share, whatever you're using. This is a survey approach to kind of look at what the range of multiples are for the direct competitors, and that'll help you determine the multiples here. Again, you have your earnings up here, and then here you're going to go from the highest to lowest multiple, the highest to lowest value, and high to low. The multiples could be pretty straightforward depending on your bank. It was really hard for us to do Deutsche. We had to really play with the multiples and kind of come up with our own multiple scenarios, because what we were finding out is that Deutsche's stock price was significantly higher than the intrinsic values. And we had to use really high multiples to even get close to the current stock price. Because the analysts were not valuing Deutsche based on the fundamentals. They were pricing it based off of as a potential target company to be taken out by a larger institution. So the multiples were inflated. Discounted cash flow. Over here you have your weighted average cost of capital. I will ask you where you got your capital structure. Did you use long-term debt and owner's equity, add them together, divide them back to get the weights for the debt and the equity? How did you calculate it? The return on the equity, or the estimated cost of the equity, should tie to the CAPM in your perpetuity and your Gordon Growth tables. And then how do you get the estimated cost of the debt? Well, you go out and you find through the either Mergent or Dun & Bradstreet, or through some searching, maybe you can Google it, is find out what the yield to maturity is on their bonds for maturities of between 7 and 10 years. So the current yield to maturity on the bonds are going to give you an indication of their cost of debt. And if you really want to dig around, you go into the footnotes, and you go into their annual reports or their 10Ks or some of the others, and you find out when they issued 7 to 10 year bonds and what was the yield to maturity in which they issued those bonds at. That will give you a proxy cost of the debt. Okay? And if you're still having problems with that, we can estimate a cost of debt and just plug it in there. Then you have your holding period. You're going to use 2019, 20, 21, 22, 23 as your holding period. You're going to have to forecast out to 2025. Sorry, hold on. 19, 20, 21, 22, 23, 24. You're going to have to project out to 2024 because you're going to have to calculate the terminal value. Okay. Then you have your growth rates here in the earnings per share. You have your discounted cash flows. And the last year in the holding period is the discount of both the terminal value and the earnings per share. The terminal value from year 6 and the earnings per share from year 5 add those together and divide them back. By the discount rate, you're gonna use the 8% here or something else. If I discount this all back, I'm gonna get, in this case, I got 111.20 cents. That's gonna tie right there to the intrinsic value, tie back up to there to compare against the stock price, and you're gonna calculate the premium or the discount. Okay. So what I'm looking for in a lot of these things, is it all tying together? Is it all validation? Is it verified? Does it make sense? The next one is the weighted valuation. Okay. So on this page, you got the models that you used, you got the intrinsic values from the different approaches. You have the three scenarios, the three weighting scenarios. Okay. And then you're going to multiply these weights by the constituent value and calculate a weighted average. So the weighted average, in this case, this scenario 2, which is the middle scenario, we took these weights, multiplied them by these valuations to get the weighted average. This weighted average, these weights, were the ones that we picked as the weights that were the most appropriate for valuing these securities. Then we compared that intrinsic value to the current stock price to calculate the premium or the discount at the end of the day. Mariel, yes?
I was going to ask how you picked the weights.
We did, theoretically, perpetuity is too simplistic. So it's always going to have a lower weight. Gordon growth is still very simplistic, but at least it has a constant growth rate attached to it. And these banks should theoretically be able to grow their earnings at some constant rate forever. If they can't, then it's perpetuity. The multiple approach and the DCF approach are probably two of the most important approaches, so they need to get the highest weights. If the bank is easy to forecast, if you're getting really good multiples, that are tight, and you're getting, and the bank has showed consecutive earnings growth over time, particularly over the last 10 years, it's pretty easy just to project out over 6 years what the earnings growth is going to be. So we want to weight DCF. Probably more. It's only if the bank is really messed up and you get a lot of volatility in the earnings. The multiples are really hard to arrive at to justify the current price, and there may be other structural issues associated with the bank that make it hard. We probably weight more the multiple approach as opposed to the DCF. But we would always give multiple, and theoretically DCF should get the most over multiple, and then perpetuity gets the least weight. And then the multiple and the DCF get the most weight. Okay. And that's how we arrived at the scenarios. Okay. And then right here underneath the middle scenario is the buy recommendation. This is the first time, or the second time that the reader has seen the recommendation since the very first page. So this is where we hit the reader between the eyes and say, okay, now we're going to start to sell the buy recommendation of the research. And then on the next page, you have your recommendation, the buy, hold, or sell, intrinsic value next to the current stock price, the premium, and then we have this trade table set up for the index, the ETF, and the stock. And we'll assume that the bank is a large component of the financial services index, stock index, and will be a significant portion based on market cap of the financial services exchange traded fund and the stock. So the trade recommendations are going to be buy forwards, buy futures, buy calls on futures, buy puts on futures for the financial services index, which it states right there with an asterisk. And then for the financial services ETF, it's going to be buy on margin, buy calls, write puts. And then for the stock, it's buy on margin, buy calls, write puts. Actually, right here, there should be 4, 4, and 4, so that we have a total number of trade recommendations that we're going to make to either our clients or our proprietary trading units, a total number of 12 trades. Okay. And then what we would do if this was an advanced class is we would go and test those 12 trades and see if we could trade them profitably, and then take positions in the stock and in the derivative contracts and try to make money off it, or make recommendations to our clients. On the next page, you want to have references. You want to have as many references as you can. Okay? The more references you have, what does that tell you about your research? when you have a lot of references.
The more accurate it
The more accurate it is, yeah, because you're double checking and looking at different sources, okay? And then what you should do for this class, since this is an advanced class, this is 123, this is an advanced class, is on the very last page, I would have your names. Underneath it, I would have your position, either portfolio analyst, portfolio manager, senior equity analyst, senior financial, institutional equity analyst, something like that. And then next to it, you want to have either a PhD or CFA or CPA or MBA or master's, financial engineering, MF, whatever it is. Next to it, and then you should have a signature, signing, and a date, so that you're basically signing off on the research with a date, because you're going to have to do that when you become a CPA. You're going to have to do that when you become a CFA. You're going to have to do that if you're a CEO or COO or CFO. You're going to be signing off on the research and the financial statements. So you should put that in as the last page. Okay. Any questions? Please, go ahead. Comment.
So the valuation and multiple approach,
Yeah.
for Goldman Sachs, this is all the competitors are all local banks?
Yeah, those are the top. I use the top 5 banks in the United States, because those are the direct competitors. In your country, under, I think it was D&B, the Dun & Bradstreet, she had the country banks, so you could go in, they should list the banks.
The country.
Yeah, you pick the country, and then it should list the banks. You could, depending on the bank, you could use, because it may be hard to get the data for some of those smaller banks within those countries. If you're having problems, I would probably do a regional approach, where you're taking HSBC, UBS, Barclays, Santander, so you're doing a European, the top banks in Europe, as opposed to the top banks in France. Okay, that would be interesting, because they do compete against each other for business in Europe. So that might be, if you have enough banks that have the data, use the peer group from the country. But if you're having problems putting it together, forget that, just use a broader regional bank peer group. That's what I would do.
Are what is it, the monthly stockholder meetings or whatever? Are they
Yeah, the
all
quarterly.
Quarterly.
Yeah.
Are those always available even if it's like a foreign bank, or is it just a US policy?
Like Sarah was saying, when you go international, it's really hard to get information, period. Okay, and different countries have different regulatory oversights and reporting requirements. In most cases, they're more relaxed. So a lot of these banks aren't going to provide transparency if they don't have to. Most of the larger banks that are traded as ADRs on the New York Stock Exchange do probably have the analyst conference calls recorded.
Okay.
Okay, so there'll be like a podcast or something. You definitely, if anybody's interested in finance, particularly global finance, you should listen to these analyst conference calls, so that you can validate and verify your linguistics, from what you're pulling from this program, because that's the way we talk. Okay, we talk exactly in economic terms, regulatory terms, accounting terms, financial terms, market terms, products, economics, and it's really fascinating to listen to a 40-minute conference call or annual conference call and listen to how these people basically, interweave all of these disciplines into a cogent conversation with the analysts, and then respond to analyst questions at the end. Yeah, it's really cool. I find those calls amazing, and they give you such great insights, on where the bank's going in the future, and that's really what you're trying to do, is to value the bank.
Yeah.
Any other questions on this? Okay. I think I'm out of time. I'll look at anything that anybody has if you want me to review anything prior to Friday. Memo.